Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, May 28th, 2019. I hope you all had a fantastic Memorial Day holiday weekend. We are back to the markets now, and we are seeing a fairly quiet overnight trade right now, inside day from Friday's range, and we are seeing 43% of ADR in the ES right now with an 18-point range. If you look here, again, inside day relationship so far right now as this thing is developing. After we had a Thursday low here, we've kind of been holding just above 28.20, just below 28.40, and that's our 20 handle range right now to watch for a breakout at some point this week. Given the current direction of this market here, I would say keep an eye on prices above 28.40, because if price pushes above 28.40 and starts to fail, we could see another rollover here that takes this thing much lower, and a breakthrough 28.20 could be the early ticket to much lower prices. At the moment, prices are holding 2800, but the key target down below is 2703 on a failure to hold above that 2878 half key level. That's this key level that goes across, that one right there. We tried to hold it, then failed. The retest has been off. And now if you fail to hold that 28.78 half, you likely come back to the 27.0375. So again, that's just looking out maybe over the next 2 to 3 weeks. If prices can't really get going higher, we could see a push downward that really takes control of the move back toward 27.03. All right, let's take a look at the NQ. You'll see here the NQ has also had quite a pullback throughout the first part of the month here. We're holding right on 7,300. That is support here. It's been holding over the last few months. Again, you can see lower highs here, and any failure to hold 7,300 again opens up the next level down, and that's going to be right here at 7K and the 69.6525 level. That's the last level here we touched before we rallied on. That's the FOMC key level there from January, and or the previous January, and that could be the next target below if prices cannot start to find acceptance back above 7,400. So I would keep an eye on 7,400 here. Any push above it with a failure could open up quite a bit of selling pressure ahead. So keep an eye on this right now. Again, very narrow 2-day range here as this thing continues to develop ahead of the next move. Let's take a look at crude oil. If you look at crude here, you'll notice that we had quite the sell-off over the last few days. That all started with this narrow 3-day range. We quantified that 3-day range with our PivotBoss Advanced ADR indicator down here. If I double click this here and drop it down to 3 days, you'll see right here again, compression right there leads to expansion right here, and that's this. And that's exactly what we were looking for in this move. We got a huge move that far surpassed our four handle projection. We got over 6 handles in that move. And now we're lower, below the 61s after taking it offered. So again, here's a little potential to see a bounce back up, but we've had higher, or this high here, we've had lower highs come into play as this thing has dropped lower. So again, we're going to have to see how this thing holds the 58s. 58 is very important here. That's the level right across these highs and lows right there, that zone. Holding 58 might kind of push this thing a little bit higher, but if it fails to hold 58, that's when we start to drop back toward the next level down, which could be as low as 49.17, which is composite VPOC. On a short-term basis right now, keep an eye on the 2-day range here. Things are kind of headed higher. We could see some sort of pullback, but if on this pullback we start to see failure, that's where we could see some selling pressure enter the market here over the next week or two. All right, let's take a look now lastly at gold futures. You'll see gold here is continuing to trade and chop around the previous month's close. That's this level right here, the blue dotted line. When offered early, then came back to it, then went bid, then rejected and back to it, then offered and back to it, and here we are. And so that level has been very important. We continue to have this pattern of lower highs and rounded behavior on the right edge of this pattern. You can also see we've held above the 1270 throughout the year. That's been holding throughout the year. It's got this rounded top. This thing really can't do a whole lot more than what it's doing now unless it starts to see expansion. We're at the point now where we either need to break down through 1270 and drop down toward 1200 and maybe 1180 down to this support zone, or we need to make a move to the upside and start breaking this trend to the upside and seeing this move up toward 1350 to 1370. So which way is it going to be? Obviously, bears have had control of this trend throughout the last few months, and again, bears are currently defending the previous month's close. If I zoom in right here, you can see an outside day down developing, although the day is not done, where the high is above the previous high and the close or the current price is below the previous month's low. That's a bearish outside day. That usually leads to more weakness. I would say right now with the breakthrough 1280, any return to 1280 intraday could be an opportunity for bears to keep it offered for a shot at pushing this thing back toward 1270. All right, that is it for now. We'll see how this plays out heading into the holiday shortened week of trading. Good luck, trade well, and I will see you in the trading room. Take care.